Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Well, saying that a lot has happened since last we met here at the Roundtable is a pure understatement, and so we are going to get the latest thinking on what's going on overseas, what's going on with our U.S. market, from our Director of Research, Shiraz Mian. Tracy Reinick, back at the Roundtable, stock strategist for Zacks.com, and a new face joins us this time around, another stock strategist at Zacks.com, Bill Wilton. Bill, welcome.
Thank you.
You'll totally be sorry you drew the short straw, I can tell you. We had some good news last week with the jobs report that came out, yet nothing could overshadow what happened in the markets and what happened in Europe to bring us, out of those doldrums. And so let's just get right to it, because over this past weekend, we've had news that the European Union, the International Monetary Fund, and even the U.S. Fed have all come together to form a rescue package to prevent sovereign debt crisis from spreading overseas. Now, our stock market, and we're talking here on the morning of the 10th of May, so at least at the time of this conversation, we can say that the market here in the United States is reacting very well, up about 300 points or so on this news. Shiraz, what do you think? Is this good news?
This is very good news. This is finally a determination from the Europeans of owning up to the problems that were plaguing their economy. The problem all along in Europe was that they created this common structure, they created the currency, and then they were trying to put band-aids on the very serious problems that had cropped up in the Union. And the markets were not buying into that. And the very real fear of contagion, of spreading the fiscal imbalances starting from Greece and then into Spain and Portugal, Ireland and Italy, that's what was the fear that was weighing globally on the markets. And now with this $1 trillion surprise bailout package from the Europeans, in combination with the IMF, the European Central Bank coming out as well, that they will be buying the national debt as well. The Fed is involved in the process as well. This reassures everybody that the solvency issue that Greece and some of these other peripheral European countries had will be resolved, and we won't have at least the contagion fear that everybody was concerned with. So it's a very good news.
But Tracy, we've heard a lot of talk, at least I've read a lot of talk on the wire, that the Dow plunge of the last week was just a wake-up call to us here in the United States that we may be dealing with this debt issue at some point as well.
Well, yeah, because we have the same issues over here, except we can print our own currency, which has been helping us get out of our problems to some extent. But yeah, our debt to deficit ratio is higher than like Spain's. So yeah, and we've seen the problems with the state levels already. Here in Illinois we have it, California has it, and those issues haven't gone away. So yeah, I mean, I think I agree with Shiraz. What we saw come out of Europe was a really powerful statement that they are going to be one now for real. And so that's a great thing for the market, and we see everything going up. Although China actually overnight was not up very much, which I think is an interesting development here. The Shanghai index was up only 0.6. So, I still say Europe is kind of still an issue out there, but we have some other things, our own debts, and then the Chinese question still hanging out there.
So, Bill, is this rescue package news of the weekend going to really bring calm to our stock market, do you think?
Well, I think, judging by the reaction that we saw this morning, the instant effect is that we're definitely seeing a sign of optimism surrounding that news. But the long term really remains a question mark. People are talking about, should Greece remain in the EU? Are they going to start kicking out, some of the smaller, weaker, troubled economies? Because the fact of the matter is that you've got 16 different countries with their own monetary policies, philosophies, all affecting one central currency. So it's going to become a decision of, well, do we want this country to be impacting us in such a significant way? So the long-term stability of it is really under question. But for now, this has given people the optimism that, we have some time now. We can settle down and really figure out what we're going to be doing in the long term. But as a short-term solution, it's definitely a step in the right direction.
So you see calm in the stock market short-term?
Correct. yeah.
Okay, Tracy, a lot of people think that there's volatility that's going to be creeping in.
Oh, I agree, because just from being out over the weekend talking with like family and friends, because of Mother's Day's weekend, a lot of the regular average mom and pop investors are still terrified again. They were kind of creeping back in. We saw like some mutual fund, flows in the last couple weeks, and then last week, bam, no, it's scary, I have to get out. So that's kind of where the question is here. What about the regular mainstream investors?
So what do you think, Shiraz? How long before, even though we get good economic reports like we did last week with, adding 290,000 jobs to our economy, that's good news for our economy. How long do you think before we take the focus off of the Europe situation, put it back on our own U.S. economy?
I think the U.S. picture was a picture of stability and improving fundamentals before the European problems came to the front. So we had solid first quarter numbers. The labor market, as you saw in the Friday number, has been on an improving trend. We saw 3 back-to-back positive GDP growth numbers. And elsewhere on the economic news front, we had been seeing stories and indicators showing that the U.S. economy is coming out. What the fear was that this European contagion fear and the China changes that Tracy alluded to, will these impact the incipient growth momentum that the U.S. was showing? And what Bill made a very nice statement. He said that what the European bailout does is it gives those troubled economies time to rebuild and improve their balance sheets. That's a good sign for the market.
How long before we put our U.S. economy back on the front burner as far as a focus, though?
We need solid growth continuing in the U.S. economy. The fear earlier on was, would the U.S. economy continue to grow as this fiscal stimulus that the government and the monetary authorities here in the U.S. put in place in our downturn? And we have been seeing solid evidence that, yes, the economy appears to be on a sustainable growth trajectory. So as long as we don't have these macro headwinds, particularly the European issue, we should be in good shape domestically here.
All right. That's the latest thinking from the roundtable for now. Always keep an eye on our homepage at Zacks.com for updated commentary on world events and market events as well. With everyone here, I'm Terry Ruffalo.